All right, welcome to another video. And today, we have something special. Oi, oi, oi. A market cap increase of 277 billion with a B. Insane. What do you think, Rio?
That's a lot of damage, but it's actually very good to see. I mean, yeah, people are getting really crazy when it gets to the stock market nowadays, and as soon as you see some intense growth, that's what people start paying their money for.
Yeah, exactly. So, of course, we are talking today about NVIDIA, chip manufacturer and whatnot. Uh, of course, known in the gaming industry, but also huge for mining cryptos, bitcoins, and now is also working on the AI space. So today we're gonna discuss NVIDIA. We'll discuss a bit of the news. We will talk about what NVIDIA is all about. We'll go over the fundamentals, and then, of course, what you should pay for NVIDIA. So let's go.
Exactly. Yeah. So everybody pretty much knows Nvidia, right? So it's a chip manufacturing company, and they're pretty much mostly famous for their graphics card, right? For the graphics units, and um, they're also very good when it gets to the disruptive industries. So, for example, they got very early on the AI hype, so they're providing a lot of infrastructure for the AI computing, right? So, for example, the servers of Microsoft are mainly based on the NVIDIA graphics chips. But also the same it was with cryptos. So a lot of crypto mining units are also based on NVIDIA dedicated, even specially designed graphics cards. So NVIDIA knows its way around when it gets to jumping on the hype train in different industries, and that's very good from the perspective of the competitive advantage. So they know what to do, they know how to do it, and they can also do it pretty quickly in comparison to the competition. But now the question is all that hype and all that 277 billion of a jump in a day in the market cap worth the price to pay for the stock? Are you too late, or are you too early, or is it right about time when it gets to the stock price, right? So yeah, for that we're just gonna jump on our lovely spreadsheet as usual. We're already plugged in Nvidia, and Jesus Christ, it's almost $800 per share. Jesus, that's a
Yeah,
lot. That's a lot.
the price is high, but let's see if the value you're getting is also high. That's
Yeah, true.
what we're after. So to check out first is the statistics as per usual. Is there anything that stands out? 1.9 billion market cap. Like a
Trillion. It's almost two
trillion. Yeah.
trillion. Yeah, body.
I see a really high PE ratio, which catches my eyes, like 66. Yeah, a PE of 66, which is quite huge, right?
Yeah,
So yeah, you're paying more than 60 times the earnings when you're buying Nvidia, basically.
yeah,
So that might be an early indicator of what's gonna come out of this valuation.
yeah.
If we go down, we can check out the company's foundations.
Yeah, and also just to stay here a little bit, I also want to say the return on invested capital is it's okay, right? 12% is something around the ballpark of a standard, let's say, at least in the S&P 500. So you cannot really say that they are very good in terms of the cost management, because we definitely know that the Nvidia is very good in its growing revenues, right? But then we can probably also see why the return on invested capital is rather smaller than you would actually expect that. But yeah, if we go forward to the company foundation, yeah, do you want to walk us through it, Robert?
Yeah. So yeah, as you could have seen already, revenue growth, check, that's good. Net income growth, free cash flow growth, that's all good. The only thing they have been diluting it a little bit over the past 5 years with 0.11%. They have been growing their dividend, but the yield is 0.02%. So that's something that we can neglect there.
Yeah,
And something important to see is that their long-term debt is covered by the free cash flow. So that's really good to see that if they need to pay off their loans or debts, they are easily able to do so.
yeah, yeah. And also, like speaking of dividends, the payout ratio is also only 1.3%, which is peanuts, of course, because Nvidia is more of a growth stock company. But at the point when Nvidia can hit the maturity level, right? When it's going to be just the dominant, let's say, market player, they will have a lot of room to grow their dividend. So this is for you as a future dividend stock, you might consider that, but that's probably only very very early steps for that.
Yep.
Yeah, so if we moving on to the income statement parts, yeah, you can clearly see that the revenue growth is insane there. It's very good to see, as well as the gross profit, right? But you can also see that the proportion to that, the R&D expenses are also increasing quite dramatically as well. So yeah, it makes sense, right, for NVIDIA, in order to keep up with the current developments, the technologies and everything. Yeah, they have to spend quite a good buck on R&D. So yeah,
Yeah. Nothing to see, nothing to add there. Maybe we can go down and check out the statistics.
yeah, yeah, exactly.
So yeah. So here we can see some good stuff, right? So net earnings ratio of well above 20%, except for 2022. But other than that, pretty solid numbers. Interest expense ratio is 0, which is really good to see. And this is the part where Kirill already mentioned the R&D is quite high. What's that? 48% in 2023. Normally, you would like to see somewhere around 20% R&D because it means that they have some kind of modes to protect their business. They have some kind of competitive advantage, yeah, compared to their competition, of course.
Yeah,
So, for example, with Coke, you would see a very low R&D ratio of maybe 1% because they already own the products. They just sell the brand, and that's something that you would like to buy into. But of course, with tech, it is the case that they constantly need to up with the newest and the greatest technology, and that costs a lot of money to develop. But still, it's high and it's something to consider. The selling and general expense ratios is 0%, which is weird, but in a good way. So it means that they're basically selling their, yeah, products by themselves. And this craze, of course, that happens with crypto, with Bitcoin mining and stuff, where there were a lot of scalpers. That makes sense, but I wasn't expecting the ratio to be this low. But it's good to see they're just selling the products as they should.
yeah. Yeah, but also you can
For
keep in mind, let's say that Intel is not doing well at all, right? They're very in deep financial troubles. So that's pretty much one third of the market is pretty much gone. AMD is their, let's say, key competitor on the market, right? But when it gets to, let's say, everything apart from gaming, NVIDIA is far more superior. So it's quite a, you can say, quite a duopoly going on the chip market. So yeah, it's a luxury, but yeah, you still need to keep up with the technology part. So that's why R&D, is a setback for the company.
Yep. And then for the other ratios, we can see here depreciation. It's good. It's around 10%. It's nothing special. It's not nothing extraordinary. It's just decent. And I think that's it for the statistics part. Of course, free cash flow growth, revenue growth, these things we already covered before.
Yeah, yeah. It's good to see, which is very surprising, that the company is able to constantly outperform the expectations. When you would thought like, okay, there's no any way further, Nvidia's gotta go down, it still keep on outperforming, and that's something what the market is actually paying the premium for, I guess. But yeah, the question is, for how long would it last, right? And is it still actually worth paying the bill? That's the most important questions, right? So now we
Yeah.
actually come to the stock valuation part. Yeah.
Let's do it. So first, of course, we have a couple of things that we can manipulate in here. So we have the analyst future growth points. We'll discuss two ways on how to do that. Then you need to insert the PE ratio, the high and the low of the past 5 years. This is also something that you can estimate. And then, of course, we need some other stuff, such as the required rate of return, discount rate, and margin of safety. And we'll get to that in a bit. But first, let's, of course, cover the endless future growth points.
Yeah.
So there's one way that I like to do it, which is to go to Yahoo Finance,
Yeah.
go to the stock, because there are a lot of analysts on this company already. They have their own estimates and predictions, and we can basically use that to make your own stock valuation. So you go to analysis, scroll down, and then it says, yeah, growth estimates next 5 year per year, a growth rate of 33%, which is quite hefty.
Oh
But we
yeah.
can keep this in mind. So 33%. And the other way of doing this is going to stock analysis. And there we can check out. their average change in revenue, profit, or cash flow, and see how that changed over the years. So
Wow,
88% on average
that's
over
unbelievable.
that's 10 years.
That's
That's
unbelievable.
crazy.
Yeah.
And of course, with this, of course, past returns are not like a guarantee for future returns, but it gives some kind of idea.
Yeah, and with the revenue growth, it's about 35%. That's again, that's the thing, right? So this is what makes Nvidia stock quite magical. Even though there's you would have thought like, okay, where else can they grow? So they became quite dominant on the graphics card business, for the regular PCs, right? So for just the end consumers, right? And then they jumped on a hype train with cryptos, right? And then they jumped on a hype train with AI and providing the graphics capabilities to the B2B vendors, right? And yeah, the question is like, yeah, are they gonna be able to keep up with finding these hot topics, right?
Yeah.
And yeah, yeah how likely it is, right? That's the thing, and that's what you can also do, for example, with a margin of safety part. But let's say in terms of the future growth, shall we try the unicorn? Let's say in
Uh,
the
let's
in the
just let's just do 30%.
yeah, let's do that. Yeah, 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 yeah,
But still, that is like your wonderful approximation that everything will be fine.
yeah.
Right.
Exactly. Yeah, yeah, yeah. So for the PE ratio, right? So we usually
Yes.
just check out the what are the past years PE ratios usually look like. Just what are the highs and what are the lows. And it's so strange to see the low of 20 and
21.
the high of
Crazy.
144. Jesus Christ. That's insane. But we could
Yeah,
shall we try that? Screw that. I
yeah,
mean,
let's do it, man. It's
just to check how ridiculous we can get, let's say in 144. Yeah,
okay.
required
So for
rate of
the
return.
right, yes,
Go
let's
ahead.
go.
Go ahead.
So basically, if you invest in mutual funds or yeah, or an ETF, for example, you would expect between 7 and 10% annual returns. Um, but of course, because you're stock picking, you're having that extra risk, and you want to also calculate, yeah, some kind of reward for taking on the risks. Normally, I put this around 12%, but you can play with this. However, if you want to have higher returns, you're gonna find fewer stocks, of course, but then you will find those magical stocks in there as well. The discount rate of return, late, I always keep this at 12%, and then for the margin of safety, it's a couple of factors depending on your age. So if you're young, you can have a bit more risk. So for example, you can put this at zero, right? If you lose this 800 bucks or maybe 8,000, you buy 10 stocks of NVIDIA. It's not going to hurt you long term because you have a long horizon to recoup those losses. But for example, if you switch this around to someone who is almost about to retire, you don't might not want to lose that big of a portion of your portfolio on one stock. So this is something you can play around with, and yeah, you can always increase and see what your margin of safety is, and up until what point it's still undervalued, for example. And then for the discount cash flow formula, yeah, I don't know. What do you want to do? 5% here, or 5 years? Sorry, or
Yeah, that's the thing, right? So we could check both, right? So for 5 years, you can already see the number, but again, just coming back to square one, what we usually say, if we're talking about tech companies, the level of disruptions and let's say the speed of it is outrageous at the moment. So you cannot even really predict what's going to be even in a couple of years. Who would have thought like we would be using ChatGPT on even daily basis already? For
yeah,
work, for any of your daily tasks and anything. So I would say even 5 years is a little bit too far fetched, to be honest. Because is it possible that Nvidia is gonna be overtaken but by some other competitor? Absolutely, it's very very possibility, right? But what's the probability of it? That's a question, right? So yeah, that's why I would say let's keep it at 5. But we can also check, for example, how is it gonna look like at 10 years as well later, right?
yeah, for sure. And then for the margin of safety, you want to keep it at 30% or make it a
Yeah,
bit higher, a bit lower?
that that's what's yeah, that's again like a charm, I guess, of Nvidia, right? They keep on outperforming, but there's got to be a point when that's not gonna happen. That was the same story with Tesla, right? Everybody felt Tesla is a gem, it's gonna be keep on growing, it's gonna take over the world and stuff, and now they gotta discount their cars in China even just to keep up with local competition, right? So you can always, have these unicorn world in your eyes and think like, yeah, the stocks will always go up. Not really, not really. So you just gotta be careful. So that's why I think
Yeah.
margin of safety of 50% is
Yeah.
okay. It's good. Yeah.
All right. And what we get then is a average target buy price considering the margin of safety of 30% of around 700 euros, which I don't think it's that crazy considering their massive PE ratio.
But then again, so our assumption is that it's gonna be growing with 30% for the upcoming 5 years.
Hmm.
Yeah.
Yeah,
And that the average PE is gonna be 80. So that's
that's true.
also very
Yeah.
expensive, but it's kind of like you pay for that good growth, right? If we, let's say, put the same, but for 10 years, it's going to be a little bit higher, right? Because of the discounted cash flow formula, it's going to get bumped up a little bit. But then again, for the value investor, right? There's not a lot of, let's say, room for safety. There's not a lot of wiggle room. If, let's say, Nvidia would be trading around, let's say, 600, I think that could be fine. But then again, our assumptions are they're realistic, but they're quite risky at the same time. So yeah, just gotta be careful, boys and girls. That's the thing.
Yeah, and then to jump on that, of course, as we always say, none of this is any financial advice. Do your own due diligence. For us, this whole sheet and soon to be web app is our way of doing the first steps before buying a company, just to screening the company or when you bought the company to check whether the price is still in line in your assumptions. But always create your own assumptions. You might know way more about NVIDIA than we do, or you might even know less about NVIDIA than we do. So this is something you should consider, and the reason why you should not just buy on a whim on what two dudes on the internet are saying.
So the only thing why this thing exists and is gonna be in the web app soon is just to teach you guys the process. And then you're actually gonna be more mindful when it gets to investing, not just jumping on hype trains and news, right? But actually, yeah, just doing your own research and just choosing the stocks you want to own carefully. So that's the whole
Yeah.
idea. Yeah.
Where can you buy it?
I have no clue, but I think I have a web page saved somewhere here, and I think it shows the website of ours, 930.com, and then you can just click on get access today. Just wanted to say one thing. We got really surprised in a good way with how many views we got in our Adobe video, so we really appreciate it. And yeah, hopefully there's going to be more and more of you guys soon. But then again, just getting back to square one, let's say it's €1, one-time purchase for now. You get the access to the spreadsheet and the upcoming web app if you are gonna jump on it right now. Because when web app is gonna be live, we're gonna bump our prices back to €15. So make sure you lock your spot right now if you want to. And yeah, pretty much stay tuned with our future videos. Please leave a like, comment, dislike, whatever you feel like. Yes. Robin, do you have anything else to
Yeah,
wrap
and
up with?
subscribe while you at it. And if you have any recommendations for a stock that you would like us to do, then feel free to comment that down below. And as always, thank you, Kirill, for joining. I don't think we did the introductions, but yeah, of course, thanks, Kirill, for joining. And see you guys next week.